Hi, everyone. It's Jen Logis with One Degree Capital. The SBA has issued some new guidance regarding individuals with self-employment income who are filing Schedule Cs for their tax returns for their businesses. We want to get right into what this new guidance says, how it applies to your business. We want to be sure to bring you the latest information. We always timestamp these. Today is Wednesday, April 15th, probably the most bizarre tax day any of us will ever go through, since our taxes are now not due until July 15th. So CPAs, enjoy it. But we do want to get right into what we're going to cover in this video. What we're going to talk about today as far as Schedule C, so these are for sole proprietors and independent contractors. This has been a long time waiting for the SBA to issue guidance on how you can apply for the Payroll Protection Program. We're going to cover who is eligible for the program, what information you need to gather before you apply, the calculation method that they're going to use to calculate it. It will be different than standard corporations. The allowable use of funds, which is also slightly different than the other program. Who is eligible for forgiveness and what of those expenses are eligible for forgiveness. We're also going to talk about some words of caution, some things to think about as you're working to apply for this. Okay, so let's get right to it. First of all, you are eligible for a payroll protection program loan if you are a sole proprietor or an independent contractor who was in operation in 2019 and is still in operation on February 15th of 2020. Now, in order to be eligible, you must have a 2019 Schedule C for your business. That's how they're able to prove that you were in existence in 2019. That does not mean it has to be filed. The SBA has said that you can prepare the Schedule C for 2019. Not all of us have filed those returns yet. You can prepare the 2019 Schedule C. You do not have to have filed it with the IRS, so that's okay if you haven't done that yet. Now, if you are a newer business, meaning you don't have a 2019 Schedule C, or wouldn't have one to be able to calculate, but you were in operation on February 15th of 2020. The question is, can you still apply for payroll protection? The answer from the SBA as of yesterday is yes, they just don't know how yet. And I realize how frustrating that is to hear. The whole thing and the challenge that they're having is how do they verify the funds and how do they verify that it is an actual legitimate business? They're going off of the tax return records. So for newer businesses, they're looking at how are they going to be able to regroup and figure out how they're going to legitimize that business, make sure that this is a legitimate request for a loan. So once they have that guidance on those newer businesses, look for more information to come. For right now, we're going to focus on assuming that you had a business during 2019 for which you either already have a Schedule C or you're able to do one. So let's jump right into what information you need to be gathering right now to be able to prepare your application for the Payroll Protection Program. As I said, you must have your 2019 Schedule C completed, does not have to be filed. If you have a CPA that does this for you, first thing to do after you watch the rest of this video, get on the phone with your CPA and get working on that. You can't do any of the calculations without it. You also must be able to establish that you were self-employed in 2019. And there are some specific things that they will accept to establish that. You would supply your 2019, one of your 1099 miscellaneous, showing you received non-employee compensation. So on that form, that money will be in box 7. So take a look at your 1099 miscellaneous that you have from last year and make sure that you have funds in box 7. If you do, that means you would qualify for payroll protection assistance. Also, invoices from 2019 would help, as would bank statements and your financials establishing that you were self-employed during that time. That's for 2019. You must also establish that as of February 15th of 2020, you were still in operation. So they're going to ask you to provide proof that you were in operation on or around February 15th of 2020. And they're going to accept a few different things for that, either a 2020 invoice that covers that time period, a bank statement, if you have a business bank account from that time period that would show some activity of a legitimate business going on, and also your financials. So If you're the type that has a good sized business, even though you're a sole proprietor or 1099 worker and you have, for example, regular QuickBooks records, that is definitely going to be a benefit for you. If you are a sole proprietor and you also have employees, you will also need to be able to provide those 2019 payroll processor records, your quarterly wage reports that you file with the state. Those would be your unemployment tax insurance forms, evidence of any retirement funds, health insurance contributions that you made during that time. Also, that's for 2019. You will also, as far as the employees are concerned, need to provide something showing that as of February 15th, 2020, you were still in operation. So a payroll statement showing that, yes, you still had payroll on February 15th. So that's the information you need to be able to gather to know if you're eligible and what to gather to start to apply. Let's take a look at the calculation now, because that is different depending on two things. First of all, it's different for this type of worker. So if you're filing a Schedule C, you have a different calculation than anything that you're hearing for the corporations. Bear that in mind. This is a different caveat of the program. There's also within this two calculations. One is if you are a sole proprietor or independent contractor who does not have any employees. And then the second is if you are a sole proprietor or independent contractor and you have employees. So first things first, let's do the no employees calculation. So you should have your 2019 Schedule C. So once you have that, you want to look at line 31 that's on your 2019 Schedule C. This is your net profit amount. So that's your net profit from all of 2019. So take a look at that number. If it's over 100,000, first thing you're going to do is reduce it to 100,000. That's the maximum amount of benefit that you'll be able to take. If your net profit amount is less than zero, if it's zero or less than zero, if you had a loss, you are not eligible for the Payroll Protection Program. So assuming that you have a number that is between 0 and 100,000, take that line 31 and divide it by 12. That's going to give you your monthly average net profit. You will take that number and then then multiply it by 2.5, because you're eligible to get 2.5 times your monthly net profit. Now, once you have that number, you're supposed to add any loan funds that you've received from the disaster loan program. This is actually in the instructions, and I have to admit, when I read this, I laughed because the coverage period is from January 15th through April 3rd. No one has received disaster loan funds for this disaster in that time period. Many of us who've applied are still waiting to get loans processed. Some of you may have received the advance, the $10,000 that now turned into some other different amount that they've lowered for a lot of people that came as a surprise. So if you received that advance money, that is not considered the loan. That is being categorized as a grant. That does not have to be factored into this. So this is only if you received EIDL loan funds. And if you did, I'd love to talk to you and figure out how you got that to go through. But everybody else is still waiting. But so you'll have your sort of recap. If you have no employees, you're taking your yearly net profit for all of 2019, divide it by 12, and then multiply it by 2.5 times to get your 2.5 times your average monthly net profit. That will be how your loan is calculated. Now, if you have employees, there's a little bit extra to that. So you're still going to do the same line 31 to get your individual net profit. Again, not more than 100,000. And if it's less than zero, that amount is going to be zero. But you're also, because you have employees for which you paid wages, you will be able to add those in. So this is a little bit different than if you had a loss and no employees, you really have no basis to file a payroll protection. If you had a loss and you have employees, though, you still are able to get some assistance for covering those wages. So you'll take your 941s that you did for 2019, your quarterly reports, you'll add those up, and that will help you determine what your calculation should be for your employees. This will be really easy when you have your 2019 Schedule C already done, because that number is actually on your Schedule C for you. You'll see it in line 5C under column 1. You're going to add to that number any pre-tax employee contributions to health insurance or fringe benefits that aren't shown in that number. Then you're going to take that number and you're going to subtract any amounts over 100,000 that are paid to anyone. Everyone is still subject to that same cap of no one can receive more than 100,000 in compensation. And that's cash compensation. You're also going to subtract from here any payments made to any employees who do not permanently reside in the United States. So this is limited in that function as well. So once you have that number for your adjusted payroll number, you're going to add in your employer health insurance contributions, the amount that you paid into the health insurance as the employer. And that is also, fortunately, on your Schedule C. You're going to see that in line 14. You're also going to add any state and local taxes that were assessed on employee compensation. Remember, state and local, not federal. This is your state unemployment tax. So you'll get that total after you add those things all together. You're going to get that total. And again, you're going to divide it by 12 to get your average monthly. Take that, multiply it by 2.5. And if you have an idle loan proceeds that you've received, subtract it from that amount. But you should be able to get the figure. This will give you your total compensation that you're able to apply for loan coverage for if you have employees with your Schedule C business. Now, the next thing I want to discuss with you is the allowable use of proceeds. Again, for those who file Schedule Cs, this is a little bit different. Their intention in tweaking this a little bit is to make sure that no one has a windfall from this. So they're very cognizant of Schedule C businesses are sometimes a little bit different than corporations. They don't have all of the type of corporate expenses that a standard corporation does. So they are adjusting this a little bit on the allowable use of proceeds. First thing that they're allowing to be used, owner compensation replacement. That was the whole part of the calculation your average net profit monthly. So they are allowing you to have employer owner and compensation as the business owner. If you are struggling with your bank, I've spoken to a lot of businesses who their banks are not allowing this. You certainly give me a call your bank back. This was decisions that came out yesterday, so they may just not know it. If you're still running into trouble, give me a call. The other allowable use of proceeds is your employee payroll costs. So for those of you who do have employees, you're able to use that to cover the payroll costs. You can use the funds for interest payments on any business mortgage or personal property loans that are business related. So a business vehicle, but not a personal vehicle. A business building, if you have a warehouse or something like that, but not your personal home. Any business rent payments and business utility payments. Business utility payments does include gas on a business vehicle. They specifically mention that in the guidance. So clearly that was a frequently asked question. Now, here's the catch to be sure that you know about. You must have claimed these deductions that we just talked about. So interest payments, rent payments, utility, employee payroll. You must have claimed those deductions in 2019 for them to be a permissible use in 2020. Again, this whole thing is to support an ongoing operation. They want to be very careful that these funds are not used for any sort of business expansion. So if you had those expenses in 2019, you will be able to use these funds for that in 2020. If you did not have that, for example, if in 2019 you weren't big enough and you didn't have your own office space, but now in January 2020, you all of a sudden have your own office space. Unfortunately, that rent is not going to be an allowable use of the funds. So be very, very careful and very strategic in looking at how you're doing this. Make sure that you don't run afoul of the rules, because there are significant consequences for using the funds improperly. You are also able to use this interest. So another acceptable use is the interest on other debt obligations that were incurred before February 15th. So if you have previous, say you have auto loans, if you have a line of credit, those types of things, you'll be able to use these funds to pay for the interest, not the principal, just the interest expenses on those. And then also the refinancing of the EIDL loan. If you do happen to have an EIDL loan, if you're watching this a little bit later and you actually did get a loan, if your EIDL loan was not used to pay, that's the disaster loan. If it was not used to pay for payroll costs, you're fine. You don't have to worry about this because you're not commingling the purpose of those. But if you got a disaster loan and part of the disaster loan was based on your payroll, then you will have to refinance your disaster loan or EIDL. You'll have to refinance that EIDL loan into the payroll protection. This is another strategic point to really be cognizant of, because the disaster loan terms are very long. So they're looking at going up to 30 years on those loans. It'll depend on how what your final loan looks like, but that's a very long-term loan. If you have to then refinance that amount into this payroll protection loan, which is at 2 years, that's going to be a dramatic difference on your payments. So you want to make sure that you look at everything in total and see how it impacts you. Make sure that this is something that you can afford to do if there's portions of this that are not forgiven. So speaking of forgiveness, what amounts are eligible for forgiveness? They've also given some additional guidance on this. It is also different if you are a Schedule C or independent contractor. What they're covering is payroll costs for 8 weeks, but they're capping the amount. So the total amount of payroll per person for that 8-week period cannot exceed $15,385. And why they're coming up with that amount is they're trying to be strategic and avoid having any windfall situations on Schedule Cs. So the payroll cost for the 8 weeks, the maximum amount per individual that you have on payroll for that 8-week period total is $15,385. You can add to that, and it's not included in that limit amount, you can add to that the healthcare, retirement, and state taxes for employees, not owners. They have specifically stated, and this is brand new, that's unique to this Schedule C scenario. They have specifically stated that owners are not able to have forgiveness for their healthcare, their retirement, and their state taxes that they've paid. You are able to ask for forgiveness for owner compensation replacement. So if you, doing the $100,000 example, if you average that out and you have your, for 2 months of your owner compensation, their draw that you're taking from the business, that is forgivable. They're limiting that to the equivalent of 8 weeks, excuse me. They're limiting that compensation amount to 8 weeks of your 2019 net profit. Again, they're looking at avoiding windfalls. So if you had in 2019, when you did your calculation, you came up with your average monthly net profit, that for an 8-week period, you do the 2019 divided by 52. For 8 weeks of that amount is the maximum amount of the owner compensation that you'll be able to receive as forgiveness. One of the reasons that they stated in structuring it this way, because it's a little bit different, they're not looking at your 2020. One of the reasons they're stating that they're doing this is because they have no way to independently verify the amount of owner compensation and the amount of income that the business is receiving on a Schedule C kind of as it's happening. They are able to look back at your 2019, which is why they want you to have your Schedule C completed. So that's the limit on the owner compensation amount. You'll be able to forgive interest on business mortgage payments, real or personal properties. That does include the company vehicles, rent payments that are deductible on your Form 1040 Schedule C, so your business rent payments and utility payments. Again, these are only ones that would normally appear on your Schedule C. It can't be anything new. So if you didn't take those in 2019, you're not going to be able to apply them for the 2020 for the forgiveness piece. One final note that I want to make on this is a couple of really important things about double dipping. And that is to keep in mind that you cannot participate both in the payroll protection plan and file for unemployment. This is more geared towards 1099 contractors or the gig economy workers. So you do need to take a look at, and again, another strategic point for you, which is more advantageous for you. Are you able to get what you need from payroll protection if you look at based on what your 2019 income was, or is unemployment a better option for you for right now to help you through this? That's a question that only you can answer. Be strategic in that when you're looking at those, but just know you cannot do both. You cannot combine both programs. Also, you cannot have the, as we discussed before, the EIDL loan, the disaster loan that's more commonly referred to. You cannot have that covering payroll and then also get payroll protection program loan funds. You can't use them for the same purpose. You can have the disaster loan for other needs. It can cover other things. Just make sure that you don't double dip on those two programs. That could cause you a lot of trouble. So what's the best thing to do right now? What do we suggest that you do? Well, first of all, if you are a sole proprietor, the first thing you want to do is contact your CPA and get your 2019 Schedule C completed. Again, it doesn't have to be filed. It does need to be completed. All of the calculations, everything that's being used is based off of those numbers. So you need to make sure that you have that filed. That is going to be required by the bank before they will be able to process your loan request. For all other businesses, if you're watching this, but you're not a sole proprietor, you're not an independent contractor, you file a regular return for your corporation, keep in mind that the Payroll Protection Program loans are starting to be funded as of this week. There's a limited amount of funds that was currently allocated by Congress. It was $349 billion. A majority of that has already been spoken for. Does not mean it's been funded. It means that there's applications for those amounts that are currently pending and awaiting funding. So if you are struggling to find a bank to work with you for whatever reason, if your primary bank is not accepting these types of program loans, if you are struggling with your bank not understanding the rules and what you're able to apply for, any of those types of issues are coming up, feel free to contact One Degree Capital. We're happy to see what we can do to help you through and kind of strategize what your options might be. We hope this information has been helpful. We do give you these updates as soon as they're available. We try to bring you these videos to give you the kind of information that you need to pay attention to right now and kind of try to filter out the noise. Be sure we're just starting our YouTube channel, so be sure to subscribe to One Degree Capital on YouTube. And you'll be sure to get the latest updates as we continue to post this. As always, in the meantime, please stay well and God bless.